Data is everywhere, and this is especially true in the world of blockchains. Transactions on public blockchains are available for all to access, which allows anyone, such as yourself, to perform on-chain analysis and help gauge market trends, investor sentiment, and much more. So this video dives into the most useful, free on-chain indicators that could give you valuable insights and help you stay one step ahead in the crypto market. First up on our list is active addresses. Active addresses refer to blockchain addresses that have received or sent out funds within a certain period. As you might guess, the count of active addresses is an indicator for the amount of active users or activity on a blockchain, since addresses are not only tied to one individual. The number of active addresses has been trending up as Bitcoin's user base grows over its lifetime. However, there are numerous periods of sharp rises and drops in between, correlating with rises or declines in price. During periods where active addresses spiked significantly, it also has marked the tops of previous market cycles, followed by a steep drop-off in active addresses while a bear market sets in. This occurs as speculators who were initially hopeful about a rise in Bitcoin's price lose their short-term interest in it, naturally leading to a reduction in use. Next up, HODL waves. The HODL waves indicator displays the market trend and age range of a specific cryptocurrency, which is Bitcoin in this case. This indicator shows the duration for which an asset has been held. For instance, a yellow color in the HODL wave represents a holding period of 6 to 12 months, while purple signifies a holding period exceeding 10 years. This indicator is useful to determine how the amount of short versus long-term holders is changing. It essentially mirrors the trading patterns and potential future movements of Bitcoin. For example, take a look at the red and orange bands, which indicate short-term holding periods. We can see that short-term holders tend to increase significantly as a market cycle top forms. This is because a lot of new participants tend to enter the market when Bitcoin is rapidly rising in price, likely experiencing FOMO. New participants would buy the older coins sold to them by investors that have held the coins for much longer, and thus resulting in smaller yellow, green, and blue bands. Historically, this would have been a good time to be taking profits rather than buying new coins. On the other hand, when green and blue bands thicken, it means that more Bitcoin is being held for longer, which could be a decent period for accumulating more coins. Now let's look at net unrealized profits and losses, or NUPL. This indicator is based on the combination of market value and realized value. Breaking things down, market value is the same as market capitalization, that is the current price of Bitcoin multiplied by its circulating supply. Realized value, or realized capitalization, on the other hand, calculates the price of each Bitcoin at its last transaction, summing and averaging these out, then multiplying that by the total circulating supply. Unrealized profit and loss is then determined by subtracting realized value from market value. This estimates the total paper profits or losses held by Bitcoin investors. Finally, this value is then divided again with the market value in order to get net unrealized profit and loss. This indicator essentially tells you the degree of Bitcoin holders in unrealized profits or losses. The higher Bitcoin holders are in profit on their positions, the higher the NUPL value goes. When a majority of market participants are significantly in profit, the blue NUPL line enters or goes near the red band, indicating potential greed in the market. This is often a good time for strategic investors to take profit. By assessing Bitcoin's NUPL value in various stages of the market cycle, long-term investors can better understand market sentiment and make informed decisions with their bags. Moving on, we have market value to realized value, or the MVRV-Z score. So the MVRV-Z score helps to determine periods when Bitcoin is significantly overvalued or undervalued compared to its fair value. On the chart, market value, as explained earlier, is indicated by the black line. Realized value, which we have just learned about, is indicated by the blue line, which can be interpreted as Bitcoin's fair value. And then there is the Z-score, which is indicated by the orange line. This is a standard deviation test that makes extremes between market and realized value stand out on the chart. Historically, the MVRV Z-score has been great at picking out market tops where market value is unusually high above realized value. You can observe these periods on the chart where the Z-score, or orange line, enters the pink box, which marked previous market cycle tops within 2 weeks. Furthermore, when the Z-score enters the green box, it indicates a period when market value is significantly lower than realized value, marking bottoms which have historically made for great buying opportunities. For an indicator that's related to the HODL waves that we mentioned earlier, we have our HODL, realized value HODL ratio. This indicator uses a ratio of realized value HODL waves. Similar to HODL waves, realized value HODL waves are different age bands of coins weighted by the realized value of coins within each band. As explained earlier, realized value can be thought of as the fair value for Bitcoin. This metric looks at the ratio between the RHODL bands of 1 week and 1 to 2 years, also factoring in the age of coins in the market influenced by long-term hodling or long-lost coins. When the 1 week value considerably exceeds that of 1 to 2 years, it indicates an overheating market. This is due to an unusually high amount of new coins acquired at elevated prices, which signals FOMO in the market. As a result, the RHODL ratio will approach the red band, signaling a frothy market. Historically, such periods have been good times for investors to realize gains during each cycle. Like MVRV, RHODL ratio is good for identifying periods where Bitcoin's price is at the extremes. It can signal cycle tops when the RHODL ratio line approaches the upper red band and indicate an incoming rally after Bitcoin's price has spent time in the lower green band. The RHODL ratio works on high time frames and could be more suitable for long-term investors compared to MVRV. Last but not least, we have the Puell multiple. This indicator examines Bitcoin's supply aspect, focusing on miners and their earnings. It analyzes market cycles through the lens of mining income. Bitcoin miners are often considered forced sellers due to the need to offset the constant costs of equipment and operational costs in a fluctuating market. Their revenues can impact the price over time. The Puell multiple is calculated by dividing the daily issuance value of Bitcoins in USD by the 365-day moving average of daily issuance value. At times, the quantity of newly mined Bitcoins entering the system is either excessively high or low compared to historical norms. When the Puell multiple line reaches the upper red band on the chart, miner revenues are significantly higher than historical norms and vice versa. Over most of Bitcoin's lifetime, these periods have been confluent with Bitcoin's market cycle tops. When the value of the Puell multiple dips into the green box, it has historically rewarded buyers in this zone with outsized gains. In contrast, when the value is high and enters the red box above, it becomes a sell signal. Well, that was it. Are there any other free on-chain indicators that you like to use? Well, if you want to learn more about other types of Bitcoin indicators, check out our video on the bull market support band right here.